What's up, YouTube? It's Todd here with Tasty Tracker. Today I wanted to go over the 2021 account. I'll show my complete process of entering in a position. I haven't gone over my, from start to finish process. So looking at AMD, I tweeted about this a couple days ago, it being a good time to enter. If you entered in at that time, I still think that's totally fine. You'll, probably be just okay. It will rebound here shortly. But now's an even better time to enter than it was then. So a couple things we'll look at here on the chart. Right now, we can see we consolidated here during this down red trend here on the MACD. Then we popped up above the 20-day. It briefly went green, and then with the past couple of days has dropped back down to the 50-day and back into a red. But we can see today we have light red volume, which means, it's not one of these big red bars. That could be pointing to the downtrend weakening. We're also at support here at $90. But that doesn't mean that that will necessarily hold. To feel more comfortable, I'd like to place my sold leg at 85.60, which would be the 85 strike, down here below the 100, just so that this acts as another level of support. We can see back here it dipped below the 100, and then for 2 weeks or so, it consolidated there before enough buying pressure came back in to push it back up. So even if the 50-day breaks here and the 100-day breaks, I don't anticipate it staying below the 100-day for any extended period of time. As far as this channel is concerned, we're at the bottom end of that channel. RSI looks good. It looks to be at the bottom end of its range recently. We do have earnings, which means the premiums are going to be high on this side of earnings and then lower on this side when we get that IV crush coming in here. My squiggle here is something I drew several days ago, and that obviously means nothing. It's just a concept of what I had in my head. What I use that to help project where it could be, 105, 110, how soon I think it could get to those levels. Okay. So now that I've determined that I think the 100-day is good support, and that is at 85, I'm going to come over to Tastyworks and open up the trading screen. First, I'm going to check out February. That's the closest monthly expiration here. That's at 35 days, which is not a lot of time. I usually don't enter in anything below 30 days, so 35 would still qualify for that. And I saw the 85 and buy the 90. So how I did that was, I clicked on the date, and then I clicked on 85 here, and then 80 here in the ask column. And that's what dictates whether it's a sell or a buy. Okay. So I can see 187 is the premium there. So I got a fill on that. It might be 185, 182, 180, somewhere in that range before I would actually get a fill on it. Who knows? Maybe I would get 187. That's good. Normally I'm looking for like 160. So this is definitely within the range of possibility, and the percentage in the money is 41. However, because we're closer to expiration, maybe I want to play it even more conservative and go down to 82.5. But then we can quickly drop down to an amount that is not acceptable for me. Okay, so now I'm going to say, okay, well, I can get 185 here on February. If I go out to March, what is the premium I can get there? And there's 205. So, 20 more bucks, and I give myself more time. So, a lot of people I think would view this as more time for it to go against them. I view this as more time for it to go in my favor because, again, we're choosing stocks that are good companies that are overall trending up. And so I can expect that the whole way out here, middle of March, I have to around this area to be above this level, and that seems pretty likely to be the case. If you look at a consolidation like this, that's a span of 1, 2, 3 months, and then we start legging up. And even throughout here, if you placed a position on here and then it came against you, you would be down for the majority of this position. But when it pops back up here, that probably because of nearing your expiration, that might even have been an opportunity that you could have closed the position. Of course, I don't know that for sure, but anyway. Okay, so now I can see 205, 208. That's a pretty good amount. I can click on next and say, okay, the buying power that's going to be required for this is around $292, which now we'll go over to Robinhood and see that my buying power is 465. So I will have enough capital to put this position on. That is the collateral that is needed in order to put the position on. If we see here, between 80 and 85 is $5, which means the total position is worth $500, but I'm collecting 208, which means I'm risking 292, and I'm going to need this much buying power in my account held as collateral for Robinhood to be okay with me taking that position. Okay, so we'll type in AMD here. Then I'm going to hit trade options. First thing I'm going to do is make sure I select the right expiration. Then I'll do sell put, and I want to sell the 85. Now I want to buy the 80. And I should see put credit spread up here. I should see something close to what it was over here, 208, and this is saying 205. That's definitely reasonable. So I'm going to hit continue. I'm going to hit 1. I'm actually going to put the fill around 203. Good for a day. Review the order. Go ahead and hit submit. Okay, so we can see it's pending, and there it hit a fill, and it actually did give me $1 more than what I put I put my limit in at 203, and it filled me at 204. So now if I go back to AMD and refresh. Okay, now I can see that I have two contracts, the 80 and the 85, and I can go ahead and just, actually the easiest way to enter in a closing order is to go back to your home screen, click on the spread itself, which is now listed up here, then hit, make sure close is selected, hit 1. And then we're going to do that for half of the price. Well, what is half of the price? I mean, 204 is pretty easy to divide in 2, but let's go ahead and add this now to Tasty Tracker. So I'm going to do put vertical and choose 80, 85, 80, 85, did 1, expiration is, and once again, it's always the third Friday of the month. You can see the average credit right there. Just if you missed that dialog when it filled, you can come back here and see 204. It should also be down here in the history right there, 204. We can see that my limit I put in was 203 and 204. So there you go. In this instance, Robinhood did just as fine as I would have expected Tastyworks to do. Okay, so I put in 2.04. This is the per share price, and collateral is generally shown as the overall price needed. Because I'm on Robinhood, this is automatically 0. And I'll say making video and posted chart yesterday to Twitter. Okay, so now I have publish checked. If I uncheck that and it's not filled in, then it will not post it to the alerts page. And for me, I have the additional check that it will post to Twitter as well. For you, it doesn't do that, obviously. But if it's filled in like this, that means it will go to the alerts page. So if you want to keep something private, you can just uncheck that. There's also this can be set at the account level, the default value, whether it should be checked or not. So anyway, you don't have to publish your trades if you're a private person. Okay, so now I'll hit save. And now we can see AMD is listed down here. And I can look at the break-even price as long as AMD is above 82.96 at expiration. I will make something. That might involve exercising something. That would be right in between our strikes, and I would never suggest that you hold through expiration. But Technically speaking, because 85 is the leg we sold and we collected 204, we subtract those two, and that's how we get 82.96 as break even. But I'm aiming for 50% here. So 102 is generated for us, so we know right away. I can come back in here, make sure close is selected, 1, and then do 102. And again, this is the per share price. So it's going to tell me that, you want 102. That is way off from what it's currently trading. I want to make sure it's good till canceled because I don't want to have to come in here and set this every day. So I'll hit review order, confirmation screen, hit submit, and then it's pending and placed. Obviously, it's not going to fill. It's not going to fill for many days. The nice thing about this screen is if you were trying to close it quickly, you can hit replace order. But if I come down here, no, let's go back into the spread. I'm not sure that it has the replace button if you go through it this way. Yeah, here you have to cancel and put a new one in, which is obviously a pain. So at least they have the replace functionality built into it at that place. Let me go back to AMD. And yeah, I can't even replace it here. So I get the same screen. All right, so that's basically it. We can see AMD is coming down, but like to actually look at the spread itself. And it peaked out here at 213. Take these numbers a little bit with a grain of salt. Again, this may not be what you could necessarily get filled at, but we can see if we look, well, let me look at the year, the week. But just this morning at 9:40, it was 185. So we already got a better fill than had we filled it this morning or earlier in the week or whatever. Okay, so I think that's all the steps that I take when I'm entering in a position. We can look at the other positions we have here. Amazon down 65 and Apple down 40. So let's go ahead and look at Amazon. It is still abiding by this trend line I have drawn here and consolidating in this overall channel. So nothing here looks concerning. In fact, MACD is low and RSI is low. So to me, that says that if it wants to take off, it could take off. And we could very easily see a move up to 3,400, but especially this level, 33.55. It's also been upgraded by some analysts, so that bodes well. We'll get IV Crush after earnings, which I anticipate them to do well on earnings. I don't know how the market will react to that, but yeah, so again, I am not worried at all about Amazon. Let's go over to Apple. Okay. Yeah, I kind of expected Apple to come down here and touch the 50. It's found support here at 127, 128. And same deal with earnings season coming up. Earnings is here. We've got the low MACD and low RSI that at any moment, I would expect to come back up here, regain the 20-day, get a boost from that, and get the IV Crush. So both these positions, in my opinion, are sitting very nicely. So I anticipate that they will be fine. Okay, so I think that's really all I have for the account. Right now, started at 1050 and I'm down to 950, so down $100. But overall, with the amount that we have invested, that's not bad at all. 169, that's not really enough to put on another position, so we're going to have to wait till we get one of these positions to close out before I can enter in any more positions. So hopefully you've made it this far and you're working on your patience and your ability to spread out your entries across both expirations as well as when you enter them. That's really important when you're starting off with this low amount. I'll leave it there. If you have any questions, let me know. Thanks.